Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst, and US-Israel-Iran war has negatively started impacting Indian stock market's fundamentals. Yes, you heard it right. It's no longer a war that is now driving the Indian stock market down because of the sentimental, fear-driven behaviors. Absolutely not. Yes, that is definitely out there. But the fundamentals of Indian companies have started taking a toll now. There is a negative impact going on. There are few sectors which are getting worse hit as of now. And there are few sectors that are keeping calm as of now. In this video, I'm going to talk about what is this crisis right now that is more than the oil crisis. Again, I'm going to present to you a lot of data points, and this crisis may not be over in the next few days. Again, it really depends on how long this war stretches. But even if the war was to be closed today, it's going to take few weeks for this crisis to get over. I'm going to present to you a lot of data analysis in this video. Please listen to this entire video without skipping because you're going to learn a lot. And this is going to help you, give you a perspective on what is happening in Indian stock market right now. So the first point is, what is this crisis that is causing the fundamental impact on Indian companies? The crisis is the LNG crisis. What is LNG? LNG is liquefied natural gas. We all know that, right? Now, as per Shriram AMC, they estimate that if this crisis continues, then earnings may fall over 4%. Again, there are a lot of caveats behind that, and we don't know whether that is going to definitely happen or not. But slowly, people have started talking about that this war is now causing fundamental impact to Indian companies, right? Now, why this LNG crisis is bigger than the oil crisis? See, we all know that the oil coming to India via the Strait of Hormuz, that is being blocked right now, right? Supply is getting disrupted. But India has many other options. For example, we can go and buy oil from Russia, right? Those options are there, those can be explored. But when it comes to LNG, there is a bigger problem for India to deal with. What is the bigger problem? So if I talk about LNG, we all know that LNG is liquefied natural gas, and natural gas simply is converted into liquid, okay, so that it can be easily transported where there is no need of the gas pipelines. And as per the Google data, the volume compresses by 600 times when they convert the natural gas into the liquid. The volume compresses, and therefore more and more quantity can be transported from point A to point B, right? Now, if you look at data here, what has happened is Qatar's Ras Laffan facility was closed. We all have heard that in the news, right? Now, this facility alone, along with the blockage in the Strait of Hormuz, these two problem points have caused world's 20% of LNG supply to be completely disrupted. Okay, and India is worst hit among many other countries. Why so? Let me now talk about data here. So for example, through Strait of Hormuz, around 50 to 60% of our LNG supply comes from there. Okay, which is bigger than the oil supply. So this is a bigger problem for us. And more than that, if I talk about some other data points here, you will know that because of this disruption, if this disruption continues, as per Nomura, around 48% of India's LNG import volume is at risk. It doesn't really mean that the entire 48% of volume are getting disrupted, but they are at risk because of course government is also intervening in these matters. But the second important data point that you need to note is that 60% of imported LNG that we import in India, that is used by our industries. Okay, and this is where the biggest problem is coming, that our industries, our companies, there are few sectors that I'm going to talk about in a few minutes. They are actually saying that it is impacting our production here. Okay, I'm going to go sector by sector, give you some examples as well so that you understand this practically, right? So this is the main problem that we are facing right now. Now, because of this supply disruption problem, there are two problems. One is, of course, if there is no supply, then the productions need to be shut down or to be stopped temporarily, right? That might happen. Second problem is that the prices of the natural gas might also soar, because if there is an interruption globally, then the prices may also go up. In fact, if I talk about the natural gas prices, so back in 2022, when Russia-Ukraine war was going on, look at the prices, okay? They almost tripled within few months of time frame, right? This was the impact due to the war between two countries. This war is actually bigger than Russia-Ukraine war. I keep saying that to people because a lot of countries are involved here, right? So the impact on the prices, so far we haven't seen a lot, but it is entirely possible that in the next few weeks, the prices may also start to shoot up because of the supply disruption. So here the problem is the volume disruption as well as the price. Now let me speak about various sectors that I've seen across the media as well. And some companies have come out and given their statement to the exchange saying that we are having a problem here. because of the gas disruptions. So let me walk through each and every sector now. Before I go down to the sectoral commentary, let me give you 30-second commentary on what Indian government is doing right now. So there is a statement that came out just yesterday, right, from the Petroleum and Natural Gas Minister Shri Hardeep Singh Puri. There is a detailed statement here, but if I take you to the natural gas section here, what you would note is that he says that India produces around 90 SCMD per day of natural gas, okay, and 30 we import from Gulf sources, right? Clearly 90 we are producing and 30 we are importing. So he's saying that we are trying to do a lot of things. For example, he's saying that large LNG cargoes are arriving almost on daily basis through alternative supply routes. Now this is what the government is saying, that we are taking good care of LNG supplies. Please don't worry about anything, right? They have also restricted some supplies. Let me talk about that in a minute. So if you read this statement here, what the minister is saying, that the domestic piped gas to home and CNG for vehicles, they will receive 100% of the supply with no cuts. However, the industrial and manufacturing consumers will receive up to 80% of their previous 6-month average. So if a company was getting X quantity of the natural gas supply, it will now be 0.80x. There will definitely be a cut in terms of how much they're going to get, right? If you look at fertilizer plants, they're going to receive up to 70%. So definitely the industry is getting impacted as per the formal statement from the Indian government. Now with this perspective, let's go through each sector and try and understand what is happening in each sector. So the first sector is fertilizers. Have a look at this company here, which is Gujarat Narmada Valley Fertilizers and Chemicals Limited, GNFC. So this company made a statement to exchange saying that our LNG supply has been restricted to 60%. Can you see that here? 60% of the daily contracted quantity is what we are going to get. 40% supply we will not get. And the company says that this will have an impact on the production of neem urea. Right? So this company is clearly getting impacted. Their urea production might drop. Definitely for how long, we don't know that, right? But it's going to impact their PNL for this quarter, right? The results will come out in the next quarters or so, but we don't know how long this war will continue. We don't know how much this LNG supply constraints will be there. And the stock market doesn't wait for the earnings to come down. Right, the earnings impact will happen a quarter or 2 quarters later, but the stock market is reacting now. The stocks have started falling now because they're all pricing in all of these earnings detriment, right? Now, it's not only one company here. If I talk about the fertilizers as a whole, as a segment, GNFC is one, Chambal Fertilizers, RCF, FACT, Deepak Nitrite, all these companies which produces urea, they are going to see a lot of problems, right? Because of these restrictions. Again, you can go and check individual companies' exchange submissions and you can just quickly see whether they are getting impacted or not. Most likely all of these companies might get impacted. But please remember one thing, this is a short-term fall. Why? Because their production might get impacted by, I don't know, 2%, 3%, 4%, 5%, 6%, maybe 8%, 10%. But the moment the war is over, the moment these LNG supplies are restored back, the production will come back. And 2 years, 3 years down the line, we'll forget, all of us forget that this problem actually existed, right? So it's not all dooms and glooms, but I'm just sort of trying to give you the view as of now. As of now, how the fundamentals are getting impacted and how the stock market is running ahead of the fundamentals. This is important if you're a stock market investor, because you need to learn this, that the short-term pain that is being caused right now is a lot more in the stock prices versus the actual fundamentals right now. Actual fundamentals will get impacted a quarter or 2 quarters later when we start to see the PNL of these companies, but the stock market doesn't wait. Investors make decisions much earlier than the fundamentals impact, but you can clearly see here these companies are getting impacted. The first sector is fertilizers. Let's go to the second one. Second is the consumer goods and EMS sector. Again, have a look at an example of a company called PG Electroplast Limited. For full disclosure, this company is in my portfolio. That's why I'm tracking this company. And on 9th of March, they submitted a exchange information. What is that information here? They're saying that we are also seeing restriction into our LNG supplies. You can clearly read this here, that due to supply restrictions imposed by the suppliers, the allocation of LPG quantities to PGL under the said contract has been constrained with effect from March 9th. Now, they don't know exactly how much this impact will be. They are saying that we're going to try and mitigate this. We're going to look for alternative buyers, etc. Again, the point is simple, that this is directly impacting the companies. Companies are coming out and sharing that their supply is getting disrupted and there is likely to be impact on their production. Now, how much this production impact may be there, we don't know. Even the management doesn't know. And this is why these stocks are falling in this particular sector. Again, majorly those companies that are producing refrigerators, washing machines, these companies might get impacted. If you have a look at, for example, Amber Enterprises is another company, right? So companies like, for example, LG Electronics, Voltas, Blue Star, all these might remain under the radar for now. Why? Because of the sentimental fears as well, and because of the LNG getting restricted. Now you can see how LNG is slowly causing a havoc in Indian companies. It's not something that we are just seeing in the headlines. Actually on the ground we are seeing the companies are coming out and sharing all of these details. So this is the sector number 2 that you really need to be careful. Let's move to the sector number 3 now. Now before I move to sector number 3, one important question you might be having right now if you are owning any of these stocks and companies is that, Rahul, shall we sell these off in losses because it may fall more, etc. I think it depends on you. My view is generally that if I am taking a bet into a company, I don't take it for short term. Okay, I look at least 2 to 3 years of time horizon, minimum 2 to 3 years of time horizon, and I'm okay to sit and go through the volatility. Now that's just me. I'm not saying that you need to do that. I've seen in my portfolio stocks falling to 40%, 50%. It's very normal in circumstances like when you're going for a small cap company or even a micro cap company. 40% or 50% fall happens. And as an investor, I am okay with it. You have to ask yourself whether you are okay with that volatility or not, because as I said, 2-3 years down the line, some of these fears will go down completely. It really depends on how long this war stretches. Okay. Now coming back to the third sector here, which is the tile makers, Kajaria Ceramics, Somani Ceramics, all of these companies. Here, have a look at this. Approximately 70% of the fuel for this industry, which is notably curtailed now. Okay. And also, if you look at the energy cost, is around 20 to 25% of their net sales. So it's a huge component of their raw material input cost that we are talking about here. And 5% rise in the fuel cost could impact their EPS by almost 5 to 7%. Jefferies has made a statement about it, right? As I said in the previous segment, that it's not just about the disruption that is happening in terms of the volume. It's also going to be impacted because of the price increases in the LNG prices, right? Now, I don't know whether the prices will soar or not soar, by how much they can soar, all of that I don't know, right? I'm not an expert in terms of the commodities and how they behave, but clearly, a lot of investors are seeing these data points. They're getting worried. They're sort of exiting these companies. And at the minute right now in the market, there are more sellers than the buyers. And therefore, the stocks are going down. It is entirely possible, let's say in the next few days or weeks, if these situations become better, the buyers might take control and a lot of damage that we are seeing might be overdone. Again, I'm being optimistic here because as an equity investor, I'm a very optimist. I don't know about you, but hopefully this gives you a good commentary about the third sector. Tile sector is invariably going to impact the overall real estate sector. I hope you understand that. I don't need to say that to you. So it is going to directly impact the real estate companies as well. It is already down to a huge discount right now. I'm not saying go and buy it. Absolutely, I'm not saying go and buy it, because we don't know what all other things might get impacted in the next few days or weeks, right? But so far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content to you at zero cost. Also, you can consider joining my YouTube community, where exclusively I try and post a lot of content for my community, which is exclusive for my community. The feedback of this community has been good. Go to my channel, find the join button and be my guest. With that, let's move to sector number 4 now. The fourth sector is food and restaurant businesses. Companies like Eternal, Swiggy, Jubilant Foodwork, you can read here, Devyani International, Sapphire Foods, Westlife Food World. All of these companies are getting impacted. Why? This is because of LPG shortage, right? 60% of our domestic LPG need we import from outside, right? Again, Indian government is saying that we are asking our refineries to produce more LPG. But the question is there no impact? I don't think so. Definitely there is some impact. How much is the impact? It's extremely hard to quantify. We don't know how much of inventory the restaurants and food companies are sitting at. We don't know how much of LPG our refineries can produce more and more, right? All of these questions are unanswered. These are all uncertain times. When the uncertainty is there, investors, what do? If they're sitting on profits, they book the profits and come out of the stocks. This is what happens. There are less buyers, more sellers in the market, and the stock prices fall because of that reason. But again, going back to the same argument here, how long this war continues, how long these LPG supplies get disrupted, and that is what will drive their actual earnings impact, which we'll only get to see after a quarter or two. And by then, we don't know if the situation will go back to normal in terms of the stock prices. So this is another sector that is getting hit hard right now. Again, depending on how do you see this sector, you can take your own calls. I'm not saying either to buy or sell, but I'm giving you a perspective in terms of what's happening here. Next sector that I want to quickly cover is auto sector. Nifty Auto has tanked by almost 15% in last 1 month. The sector that was enjoying the tailwinds of GST reduction and whatnot all of a sudden has come into problems, right? Now, if you look at, for example, companies like Maruti, Mahindra and Mahindra, all these good OEMs are right now struggling because of the gas crisis, okay? Now, as per Nomura, there are two main impacts that they see. One is that because of the gas usage in, let's say, paint shops, they have highlighted that paint shops that, paints the body parts of, let's say, cars or SUVs, that is getting impacted. And secondly, industrial operations, for example, forging, casting, all of these that makes components for the cars and for the two-wheelers, etc., they are getting impacted, and because of which the auto stocks are also tumbling. Also, please remember, auto stocks were all-time high just a month back because of the GST reduction, because of the higher sales number in January, February. I talked about auto sector as one of the sectors that I was really bullish on, but all of a sudden this war has come into picture and all our thesis, all our theories have gone for a toss. And this happens as an investor, right? I mean, it's not that if I've said that I'm bullish on a particular sector, I'll remain bullish. All of these things come in our way and we have to reassess, rethink about our strategies. But if you ask me, yes, the production of these companies might get hit for short term. We don't know yet. We'll have to see that. Maybe 1 week, 2 week, 3 week. We don't know how much of impact it will cause. And again, as I said, there might be some impact in their earnings. It also depends on the inflation for the overall economy. Because please remember, when the oil prices go up, what happens? We will have inflation in our economy. Definitely we will have inflation. And because of inflation, if the consumer demands drop, that is more worrying sign for auto sector, because if all of a sudden people are not buying motorcycles or cars, that is even more dangerous than just having the production shut down for a week or two or whatever that might be, right? That is the bigger worry for me, that if that happens and if we see the rural demand not there, urban demand not there, then we might see a big problem in terms of the sales number. We'll see how the sales number play out in the month of March, April. Again, I'll come back and talk about that on our channel. If you've not yet subscribed, hit the subscribe button so that you get the notifications whenever I'm giving you these timely updates. The timely updates are very important. So this is another sector that is getting beaten up. But in my view, this is a good sector to remain focused on, because there are definitely structural tailwinds behind it, be it the GST reduction and whatnot, right? So that's one. Now let me move to another sector here, which is not directly impacted, but indirectly because of FIs might get impacted, which is the banking sector, financial sector, and it's fallen by almost 11% since this war started in just 14 to 15 days. Okay. Now, Sunil Subramaniam has written a beautiful article on Economic Times. I totally loved it. Okay. What is he talking about? He's saying that why banking stocks are falling. Simple reason he's giving is the FI selling. See, FIs are right now exiting Indian stock market at a rapid rate, even rapider than previous months of, let's say, November, December, January, right? Now they have their own reasons. They might come back, they might not come back. I don't know that. But point is that they're selling the ETFs, okay, or they're selling the passive indexes, okay. And when that happens, what happens? Let's say if they have got some positions in Nifty or Nifty Bank, and if they're selling that at ETF level, the constituent stocks, the AMCs have to sell. There is no other choice, because they have to keep the index and the stocks in the same line, in the same allocation, right? That's what is one reason. FIs are actually shorting their banks, okay, as of now. Again, tomorrow the situation might be completely different, okay? I don't know what can happen tomorrow. But the fact is that right now the sentimental fears are triggering up because of the fears of, inflation going up in an Indian economy, right? And when that happens, banks are likely to get impacted. PSU banks, for example, have had a massive rally in the last few months. Okay. And of course, at some point in time, the profit booking also will kick in. And that has sort of become a natural point right now. Somebody who's sitting in, 50-60% of profits in PSU bank, they're going to cut it, right? Because of the fears that are causing it. But if you ask me, from a valuation perspective, banks are looking very good. Okay. There may be more falls, further falls. It depends on what your strategy is, whether you're okay to accumulate, whether you want to buy or not. It's up to you really. Whether you want to just do nothing in this market, that's absolutely fine, right? It is entirely up to you. But this is another sector that is causing problem. Now, another sector that I quickly wanted to cover is IT. Nifty IT has fallen by almost 37% since its peak. Okay. Now the problem is that Nifty IT is down, finance is getting down, auto is getting down. What is left now? Because if you look at Nifty 50's allocation, so let me show you the Nifty 50's allocation. So if you look at Nifty 50's weightage here, financial services 37%, IT 8.84%, oil, gas, consumable fuels 10%, and automobile 6.96%. Now out of these sectors, if you see, financial services are getting hammered down. IT already down 37%. Automobiles around 7%. I showed you the data, 11% down right now. And if you look at oil gas consumers, this sector is fine because actually ideally they should be the beneficiary of what is going on because of the higher oil prices, etc. But overall, if you ask me, Nifty, because has higher weightage to financial services, IT, auto, etc., it is not going to come back very, very quickly. We really need something big happening, like the war ending, some sort of ceasefire happening, some sort of talks for negotiations happening. All of that, when it comes to play, markets will come back to its own course. Okay, whatever drawdowns we are seeing, it will go back to normality. I don't know, how long it will take. It might take, I don't know, few weeks. It might take few months. History tells us that this is not the only incident that has happened. There have been so many incidents and bigger disruptions than this, what we are seeing right now. And every time market has recovered. Again, I am being very, very optimistic here. I am not panicking at all, right? And this is what I keep telling my community. And they say that sometimes that you're repeating every day the same thing. I say, yes, I'm repeating every day the same thing because every day market is falling. And somebody need to tell you that it's okay. Market is falling in the short term. Markets may recover depending on how long this war goes. It might be very quick. It might take few weeks. It might take few months. It really depends on how long this war stretches. But in this video, I've done my best to bring you a lot of consolidated information in one, 20 minutes sort of a video. Hope you liked it. If you like this, subscribe to this channel because that's the only way I can continue bringing this type of content for you. Like the video, let me know in the comments. Thank you. And if you want to join my YouTube community, you're most welcome to do so. Simply go to my channel, find the join button and be my guest. With that, I'm going to see you in my next video. Until then, keep rocking.